Welcome back. Take a look at futures this morning. We are expecting a mixed opening according to futures, indicating a gain for the Dow, but a decline for the NASDAQ. Right now, the Dow Industrial's up 39, the NASDAQ down 30, S&P 500 lower by about 2 points. Freddie Mac reporting 30-year mortgage rates declined to 7.5%. Okay, coming off of that 8% level last week. This is the largest weekly decline since late last year. We've got key housing data on deck for next week. The November NAHB Housing Market Index is out on Thursday, followed by the October housing starts and building permits out on Friday. Joining me right now is Realtor.com Chief Economist Danielle Hale. Realtor.com is owned by our parent company, News Corp. Thank you so much, Danielle, for being here this morning. What are you expecting in terms of the housing data coming out, and how would you assess the market right now?
Yeah, well, I would say home prices are still pretty high, but there is not so much activity in the market right now. Mortgage rates are down to 7.5%. That's great news for potential buyers, but I think it's important to keep that context in mind. You know, they're down from 8%, which was, a 23-year high. They're still up from a year ago, and so it is still expensive to borrow money to buy a home, and we're seeing fewer buyers interested in the market as a result, but we're seeing even fewer sellers, generally speaking, and so that's keeping the market relatively competitive, even though we're not seeing as many home sales as we have over the past couple of years.
Well, Danielle, Realtor.com's weekly housing trends show the median home listing price for the past week up 1% over last year. What other trends are you looking at?
Yeah, that's right. So prices are holding on, sometimes ticking up like we saw last week. I think the other thing to look at is new listings. One of the features of this year's housing market has been that we don't have a lot of home sellers on the market, and that has kept the market competitive, kept those prices moving higher. But in the last week, we saw an uptick of 0.6%. Now, it's not a big uptick, but it is a step in the right direction. And I think that's important for people who are looking for homes. They really need to see more homes on the market because we're looking at a level of inventory right now that's roughly 40% lower than what we saw before the pandemic. So there just aren't a lot of homes available for sale, and that's keeping the housing market competitive.
Danielle, today we are honoring the Marines on their 248th birthday, and of course, Veterans Day is tomorrow, the 11th, and we're honoring and remembering all who serve our country today. Talk to us about the benefits of the VA home loans, how they're helping our nation's veterans.
Yeah, so VA home loans offer several benefits for veterans. The chief, most important benefit is a 0% down payment option. So most other loans require you to put some money down when you buy a home. With a VA loan, you don't have to put any money down. And in fact, 75% of VA loans in the last 12 months had 0 down payments. So it's an option that can help potential home buyers get into home ownership sooner than if they had to amass funds for a down payment, especially when prices are high. In addition, VA loans offer lower mortgage rates, which is really important when mortgage rates are as high as they are right now, and flexible credit criteria. So you don't have to have perfect credit to qualify, and it is a great benefit for those who have served.
Ryan, jump in here.
Yeah, Danielle, that blew my mind, that stat you said about 40% less inventory right now. I'm curious, it looks like interest rates are starting to come down. They're starting to ease a little bit. If we see interest rates continue to fall here, do you think that'll start to spur a lot more activity in the market? Because to your point, like, hey, if I got a 2% mortgage and I'm in my home, why would I sell and then get an 8 or 7.5% mortgage? Is that the catalyst we need to start to see more activity here? Because obviously supply and demand are so out of whack. There's just not enough inventory and so many people looking.
Yeah, I do think seeing mortgage rates come down is going to help, but I think it's important to note that a lot of homeowners have really low mortgage rates right now. So 90% of homeowners are sitting on a mortgage rate that's under 6%. So we're going to have to see mortgage rates go even lower to really see some seller uptick.
Danielle, what kind of activity are you expecting in the coming months and going into 2024 in terms of activity in the markets?
Yeah, so housing slows down seasonally as we get towards the end of the year. So we see fewer sellers, fewer buyers. That's typical. Last year, we saw an even bigger slowdown because mortgage rates spiked in the October-November period, kind of like we've seen this year. And we have seen some signs that the market is moving in that direction this year. I think that the reduction in rates that we're seeing now is something that's going to be important for the first quarter of next year. It takes some time for people to think that now is the right time. I need to think about buying a home. I need to get my finances in order, plan my budget, think about what I want. So I think this drop in rates is really going to have an impact as we move into the first quarter, which is, of course, getting into prime home buying season.
All right, we will leave it there. Danielle, great to talk with you this morning. Thanks very much. And again, Realtor.com is owned by News Corporation, a sister company of Fox News Media. Thank you, Danielle.